The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today is December 6th, another episode of the CFRN Thursday, where for about an hour we go over the trade setups in slow motion. And the game plan this afternoon is, number one, to go over the trade setup from start to finish in slow motion. And then we're going to take what we've learned here and apply them in a live setting. Okay, so this is live market. The idea is to take that same setup and go inside the market here and put trades on and take them off. So throughout the program, I'm going to make some observations, some traps to stay out of, that kind of thing, and we'll see what we can do. Okay, if you're brand new, this is a great place for you to start. You know, you might be just starting your trial and you're wondering, what is CFRN? What's the trade setup? What's all these red and blue, green lines going on? This is going to be a great syllabus for you. Okay, what you see here this afternoon is exactly what you'll see Michael doing, but in about fourth gear. Okay, so at least the game plan would be for you to go into the trial with your eyes wide open. So at the end of the trial, when you do get an offering from CFRN that says, hey, do you want to be a member? You know, you can make an educated decision on whether you want to pursue this or not. Okay. The platform that I'm featuring is the DT Pro platform. That is the platform I support. It's the same platform that Michael and Dwayne use. Okay. So if you are going to go down the CFRN path, this might, this would be a good place to start with this platform. Now, the indicator sets are available in Ninja. There's some tweaks you have to do to it. So if you are a diehard Ninja person, they're available. You just have to get the file from Michael, and Michael will help you from this point on. Okay. So again, if you're brand new, this is CFRN syllabus for you. Okay. If you are already a CFRN member, the good thing about for you guys is you're going to get to hang out with me, learn some screen time in front of the markets, learn the personality of the markets that we're trading. Again, I'm going to make observations for, to stay out of some traps and things to look out for. So some of those, if you're spinning your wheels or you're not getting it or what have you, at least, maybe I can, turn the light switch on and say, hey, this is what you're doing wrong, or, this is, consider this, consider that, and then maybe that'll tip the scales in your favor ultimately. Okay. Some of the observations I make will be some of the things that people will do and not see it because they got the blinders on. So I'm going to make you, aware of what's going on. And like I said, the idea is, to tip the scale in your favor. Okay, so that's a scoop. All right. Before I get started, I have to go over the disclaimers. So again, if you are a repeat CFRN guy that pops in here every Thursday, this would be a good time to go get a cup of coffee or a sip of drink, a drink or whatever. If you are brand new to futures trading, this slide is for you because this is not only are you learning the CFRN methodology, but you might be jumping into the futures space for the first time. Okay. And joining the futures little space here, trading environment, this is a leverage game. All right. So you're going to be taking on some risk anytime you push the button. Okay. So this disclaimer is basically for you. All right. And I don't like to take it lightly. I don't like to throw them up there and then shut them down. What I like to do is just take a few minutes to basically tell you and scare you a little bit. All right. And basically it says, trading is risky And basically, you can lose everything and some in your trading account if you don't have a trading plan, if you're not using stop losses, if you are not in front of the screens, you turn your back to the trading account. So if you're not engaged in what's going on, this disclaimer is going to hit you right in the face. Okay, I've been doing this for almost 25 years, and I've really seen the good, the bad, and the ugly when it comes to trading. Okay, so again, I don't like to throw this up there, okay, and then say take a few minutes to read it and then shove it back under the blanket. Okay, the idea is to open your eyes open to what trading futures is. Okay, it may not be suitable for everyone. Okay, because we're talking about people that have some additional risk capital that they could put at risk here. Okay, the good thing with CFRN, okay, is that you are going to have a set of rules, right? We're going to go over those rules this afternoon. All right, so you'll be in front of the markets. Okay, you'll have a set of rules. Every trade has a stop loss, so you'll be losing a stop loss. Okay, they use aggressive risk management, so you'll have to be engaged in what's going on in the marketplace. That means you have to be in front of a trading platform. That means you also have to be in front of a DOM. Okay, the DOM is this tower here. It's called the depth of market. And so if you're doing all the right things, all right, placing the stop in front of the screens, in front of the markets, in front of the DOM, and something, crazy happens in the world, at least you're in front of the depth of market here, and you can just push the exit at market button and get the heck out of Dodge. Okay, so what I'm saying is with CFRN, because you have some rules in place and you're using stop losses, and you have to be in front of the screens, you're going to water some of that risk that I just outlined. Okay, it doesn't take it totally away from you, but again, this disclaimer really is meant to scare the new guys. Okay, by the time most of the guys that get to CFRN spot, they've been to this guy and this guru, and they've followed that guy and this guru, so they've been worn out a little bit. Okay, so they're kind of numb to this disclaimer. Okay, so again, that's the long and winded explanation about this slide. Okay, but again, I just don't like to make light of it because it's a reality. If you're not watching your trading account. The other thing is my relationship with CFRN. Okay, I am Daniels Trading. CFRN is the educator. The trading tools, the software, the third-party application, they're the educator. Okay, their indicators are built inside my platform. The platform right in front of you is called DT Pro. Okay, now bear with me because my phone is buzzing and I'll need to pick this up. So one sec. All right, sorry about that. So we got guys that are still trying to pop in here. I started the webinar a little bit early so I can go over the disclaimers and the stuff that I have to fill in for compliance. So I was on this slide, and I was talking about my relationship with CFRN. And their indicator set is built inside the platform, and this platform is called DT Pro. Okay? So what happened is, short story, about 8 years ago, Dwayne invited me on the radio program. CFRN was just radio. Have special guests on the program, just talking shop, markets. He invited me on. And what I've noticed, inside the chat box and stuff, is that people kept asking Dwayne, show us how to do this, show us how to do this, show us how to do this. And ultimately, he got together with Michael. Both of them are TradeStation developers. Our platform reads easy language. And so I said, hey, guys, if you're going to start, this school, why don't you consider downloading it or, developing it in the platform, because the platform is free. And so that won't be an extra burden on your members that want to go down this path. And so that's kind of how it started. So since then, I'm in the room every single morning. I know the setup. I know the platform. I started CFRN Thursday on just demand. Guys wanted a slow down version of what was going on in the training room. It gave them an opportunity to ask questions in a first gear environment, and especially for the new guys, this was kind of a great way for you to learn the setup before you get into the training room on day 1 or 2. So it worked out, perfect timing. Over the years, the people have really leaned on me to show, if guys are struggling or they have questions, guys will show me, they'll take a picture here, for example, like snipping tools. They'll take a picture of their chart. They might send it to me and say, hey, I took this setup. Is this a valid setup or not? So really here at the desk, we kind of just spoil you. And the idea really is to, get you up to speed, turn the scales into your, towards your favor. And, obviously there's a mutual benefit, right? So if you do good, I do well. So I don't mind taking the time to help you guys out. Just raise your hand. All right. So that's the scoop. And that basically covers this slide. Okay. And that's my relationship with CFRN. So sometimes it gets mixed up. Okay. A lot of guys will call me in, because I can't get a hold of Michael or Dwayne. And so I have that flexibility to reach out to them and say, hey, would you give Joyce a call? She needs something. Or call Frank, he needs something. I have, like the bat line to Michael and Dwayne. If you need something with some urgency. Okay. So that's the scoop. That's step number 1. Get through the disclaimers. So now we're going to go over the basics. Okay. This is the typical slingshot setup that's been around since day 1. Okay. This chart goes back to 2012. I always refer to this one. Michael took a screenshot of this, 6 years ago. I've kept it on my desktop from this point on. If someone ever asks questions or, needs a visual, I'll send this screenshot. Hold on. I'm writing an article, so so I'll send this diagram because it basically shows everything in a nutshell. Okay. So first order of business is the time frame. Okay. We're on a 4-tick range chart. All right. So if you do have DT Pro, you might be on an hourly, you might be on a daily. Okay. You might be on a 5-minute chart. The idea is to get to that 4-tick range chart. So what you're going to do is in the upper left-hand corner next to the time, there's a little drop-down box here. Just left-click on it and go down to custom. Another box will open up, and I want you to select range bar. Okay. Make that 1 look like a 4. All right. Hit OK. and then you're on the correct setting. One of the first traps people fall into is they do the right thing and hit custom, but they'll go to the tick bar. They make the 2 look like a 4, and then the chart looks goofy like this. If you're staring at something like this, it's wrong. All right? You need to be on a 4-tick range chart. Okay? You can tell it's a lot smoother here. Okay? So the first order of business, as I said, was the time frame, 4-tick range. And there's some advantages of using the 4-tick range. The biggest thing, and the one thing you'll hear Michael in the room talk about, number one, is that the height of each candle is 4 ticks. Okay, that does not change. All right. So in the training room, what you're going to hear Michael do, and you'll hear him say, and all this other stuff, he's going to start calling out some highs and lows of the candle. And he does that so he can be proactive in placing an order. Okay. So a lot of times what he's doing is if he's calling out a high or a low, what he's setting up to do is to buy or sell or enter the market on a stop. So if the S&P is at 2670 and a quarter, okay, he'll be right-clicking in the green above the market with the anticipation the market's going to go up in his direction. Or, if we're here at 2670, he might be right-clicking underneath the market, waiting for the market to break down and selling it on weakness. Okay. The idea is to be proactive on those events or occasions where the market takes off and you're kind of sitting, waiting, trying to get in, and it just already blasted out. So that's what he's doing. He's being proactive. Okay. That's how he can do that. Okay. So that is one of the advantages of having the 4-tick range. And of course the chart looks real smooth, and that makes it, tradable too. Okay. It's create some actionable trades that way. Now, go back to the diagram. Now that we have the 4-tick range, the time frame correct, we're going to focus on the top portion of the chart here. Okay, just the price action. All right. So first order of business is some buzzwords and some things that you're seeing on the screen. So this red and blue line, okay, that's referred to as the MA1. Okay. The green line is referred to as the BBC. Okay. That's short for bullish and bearish cross. Okay. And that leads us into step number 1. Okay. And here it is. When the MA1 crosses the BBC, that is step number 1. That is the cross that we're looking for. Okay. If the MA1 is red, we're looking for selling opportunities. If the MA1 is blue, we're looking for bullish opportunities. So the one that's highlighted here is a bearish cross. All right. So we're looking for selling opportunities from this point on. Okay. So now from this point on, I want you thinking color. So if the MA1 is red, then you're going to be looking for sells. And if the MA1 is blue, you're going to be looking for buys. You're going to be looking for green candles and blue candles. Okay. The MA1 is red. You're going to be looking for red candles and red, moving averages. Okay. Everything is going to be the same color. You want it all color coordinated. Okay. Because here's what I expect to happen. After the cross, what the normal thing for the market to do is to gravitate toward the BBC, as it does here. And that's what you're looking for the market to do, the normal thing. Pull back to that green line. Not only are you looking for it to pull back to the green line, but then you're looking for the close in the direction of the trend. Okay? So if the MA1 is red, then we're looking for a red candle or a down close. Okay? That's what we're looking for. That would set step two in motion. Okay? So again, after the cross, we're looking for the market to pull back to the BBC, which is that green line. We're looking for the touch and then the close in the direction of the trend. So notice how the MA1 is red and the bearish candle is also red. So now you're kind of seeing the common denominator here, because that's going to lead us into the slingshot or the oscillator portion of the chart. Okay, this red and blue line here is referred to as the cycle. Okay, the green line, well, it's just the green line. It doesn't have a fancy name, but it's just the green line. But here's the importance of the two. Notice I talked about everything being the same color, right? So if the MA1 is red, then we're looking for a red candle against the BBC. We are looking for then a red cycle. Okay, everything's the same color. What the cycle is telling us is this. This is a downtrend on this time frame or on this chart. Okay, we're in a downtrend. The price action up here and the green line pulling away or creating the separation is the divergence that Michael refers to in the training room. What this implies is that the price action up here is just a little air pocket in this ongoing downtrend. Okay, so with the down close and the bearish divergence, what we would end up doing is focusing our attention to the slingshot, looking for that separation. Okay, the cycle is red, it's the same color, the green line is pulling away, we have space in between, so there's nothing else to filter, okay, but to go inside the DOM. Okay, again, the DOM is this here, depth of market. This is where we would go in and either buy by left clicking in the green, expecting prices to go up, or going in the red and left clicking, all right, and getting short. Okay, that's what we would end up doing. So with this example that I'm showing you, if step 1 is present and we identify step 2 in addition to the divergence that we have here, then what we would end up doing is going inside the DOM and left clicking. End up just left clicking right there. Okay, we would create a short. Okay, with the expectation markets were going to go down. That's how we make money if that happens. Okay, every trade has an 8-tick stop attached to it. Okay, so that means if you're trading the crude or the gold, if you're dead wrong, you're losing $80. If it's the soybeans or the S&P, it's $100. If it's the mini Dow or the euro, it's closer to $40. Okay, every trade has a stop attached to it. And here's the scoop: the trade really exists in the slingshot. Okay, because here's what the deal is: the cycle is giving us the direction, right? The direction is down. The green line pulling away, together with this price action, what we expect to happen is for this green line ultimately to come down and close the gap. That's the normal thing for it to do. And in doing that, the market will make a new pivot low. And it's at that point we get out. This is where we close the trade. Because what we expect to happen is that the green line pulls away from the cycle again. And pulls away from the cycle again until the color changes. Then we're looking at bullish opportunities. And then you're looking for that cycle to get underneath it, creating bullish opportunities. All right? So in the end, you're selling this, you're selling this, selling this, and you're either buying this or buying this. Okay? If you're brand new to CFRN, you are not learning to pick the top and pick the bottom. And you're not learning to trade it from point A to point Z. You're learning to take a piece out of the middle with a tight stop behind it and aggressive risk management along the way, which we'll go over when we get into a live environment. Okay? Let me tell Paul to call back. 1 sec. Call back in an hour, Paul. Call back in an hour. Okay. So every trade has an 8-tick stop attached to it. We're going to have aggressive risk management. Okay? That is what you're signing up for. So, in a nutshell, you're basically looking at the market under a microscope, right? Because you're on a 4-tick range chart. We're using a tight stop. Okay? So, like I said, your risk, if you're dead wrong, is either going to be $80 or maybe $100 per contract. You're going to be using aggressive risk management, so that means you're going to have to be in front of the screens. Okay? You're going to have to be pretty darn good on the DOM to move the stops and enter the markets. Okay? So, it's going to take some time. Okay? This is something you don't learn overnight, but it will slow down. So that's why we created this piece on Thursday, is to go over the setup in slow motion, so you can absorb what's going on in the training room if you're brand new. And if you are a returning CFRN member, maybe there's some things that you're missing, you're not running on all cylinders, and maybe there's something that I can explain to help you get over some of those hurdles. Okay? So that's it. We are going to look for that setup right here in a live environment. Okay? So the first order of business is I'm going to set up my DOM. I'll show you guys how to do this in a second. All right. The DOM, this is the tower that we buy and sell from. What I just did is I created a bracket. Okay. Notice what happened to the DOM. If you left click on that Tinker Toy triangle on top of the DOM, notice how the bottom of it opens up. What I want you to do is select buy stop and sell stop. Okay. Keep the sell limit and buy limit open because we're not limiting our profit. Okay. And we're going to let our profits run. But after selecting buy stop and sell stop, what I want you to do is right click over it and put factor in ticks. Whatever number's in there, just make sure it's an 8. Because as I said before, every trade has an 8-tick stop attached to it. Okay? So again, here's sell stop. Here's my arrow. Right click over it, factor in ticks. Make sure that's an 8. So what that's going to do is, as soon as I enter the market, it's going to put me not only in the market, but it's also going to put the stop in for me. So I don't have to do any additional clicks. Okay? All right. So that's setting up the DOM. So if I execute something, I'm not fumbling along with the DOM and trying to get a stop loss in. It'll already be on autopilot, so to speak. Okay? So let's go around the markets here and see what's going on. Okay? All right, so hold on. I do have to take this call. Crude setting up for a potential short. Okay? Notice the bearish cross right away. That MA1 is green. So hang on. All right, I'm back. All right, crude oil, looking for the pullback. All right, so we're looking at crude oil January. All right, so first order of business, we're looking for step number 1, which is the bearish cross, which is that MA1 cross in the BBC. It does it right here. The next thing I want you to do is I want you to hit the zoom out button here, this red magnifying glass. All right, I want you to see if the market is trending. Okay. Sometimes you get hypnotized by, you're looking at Michael's charts and you're looking at a, small picture here. Okay. What you're seeing here might be telling you something. You might be saying, hey, we're trending, we're going down. If you take a few moments just to click out, you'll get to see a little bit more real estate to your left. And you'll find that sometimes we're not trending. We actually might be trading sideways. So if you're falling into the trap of, I feel like I'm getting stopped out a lot, this is one of the big things right here. Take a moment to zoom out, okay? You don't have to change time frames, okay? Just a few clicks so you can see what's going on. As long as we're making some lower lows or higher highs, then we're trending, okay? So that's the thing. We have to be trending before you can take action, all right? So we had the bearish cross here, all right? The normal thing for the market to do is do what? Pull back to the BBC. It happens right here, and here's the down close. All right, so there's step number 2. What's different about that chart I showed you earlier is that the cycle is blue. It's a different color, okay? If that's happening, you have to draw the trend line. Not only do you have to draw the trend line, the market's going to have to close below the trend line in order for you to take action, okay? So number 1, okay, get in the habit of zooming out as soon as you get the cross, because you have to know whether or not we're trending or not. Number 2, the normal thing for the market to do is to do what? Gravitate toward the BBC. So as we start doing that, I want you to engage the trend line, because you never know if it's going to get there, like it happens here, okay? You don't know. All right, so that's a trend line. Here's another one. Notice how there's 2 green candles. That's another one, okay? We have another setup here. So here we go. We get another green candle here. I'm going to draw a trend line, okay? Are we trending? Yes, we're making some lower lows. So I'm looking for the market to pull or come back to the green line here so we can look to go short. Okay, so let's see what happens. Well, maybe it won't. All right, it's a little bit flat here, but it's starting to do it now. Okay, now we're going to have to make a new swing low. Okay, look, we have a little double bottom here. Make a new swing low. So let's just abandon the crude right now. Okay, here is the natural gas. Okay, same picture. Okay, bearish cross. Get in the habit of doing what? Zooming out. We have to see if we're trending. So I do this. Yep, we've made some lower lows here, lower than this low over here, right? So that tells me we're trending. The normal thing for the market to do is to pull back to the BBC or in the green line, activate your trend line, start drawing. Okay? What color is the cycle? It's red. That's good for us. Is the green line overhead? Yes, we have bearish divergence. Okay? It didn't quite get to the BBC, but what it did do is it closed under the trend line. Okay? So that's telling you right here on this candle to get short. Okay? That's a bearish setup right there. That's one reason why you get in the habit of drawing trend lines. Okay? Because you never know if it'll quite get there. Now, right now, here's the observation. We need to get under this level here, right? Before we can take action. This is great. The cycle is red, so now we're starting to do that. So maybe if she pulls back here, we'll try to get short again. Okay, so we'll let that kind of set up here. Well, here, maybe it happens while we're sitting around, so hold on. See, we're trending. So notice the first thing I did was zoom out. That's an easy and obvious trend, right? Congested here at first, but now we kind of broke down. All right, so we're looking for the market to come back to the green line so we can start drawing another trend line. If you have DT Pro, that's this line right here. Okay, notice how I have a pair of crosshairs as my mouse. Okay, the cycle's turning blue, so now that's watering down the probabilities of this trade, right? There's the trend line. That is a close below the trend line. Okay, all right, I missed it. Okay, I placed an order to try to get short right here on a limit. It kind of broke down. It already went 4 ticks, so I'm just going to take it off. All right, that was an aggressive setup right there. Okay, switch on you again. Crude oil. Okay, notice what I'm doing, zooming out. We do have the bullish cross. Okay, are we trending? I think we're just expanding the box here. So for the moment, with dynamic resistance printing, these are the dots up here. Okay, we're not going to do anything with crude. Okay, gold. Notice the first thing I do, zoom out. Notice that we're making some lower lows here. Okay, stair stepping down, that's a good sign. Okay. We had a bullish cross here, but we are running into resistance here. I would like to get above this high and definitely above this dynamic resistance before I would consider any long positions. What I do like is, step one, we have the cross. I like the fact that the cycle is blue and we have the green line underneath it. So we do have bullish divergence. So we got a lot of the variables that look good, but right now we're bumping our head against resistance here. So for the moment, gold's off the table. All right, let's go to the madness here over into the ES. Okay, notice the first thing I do, and what you should do, zoom out. Okay, this looks to me like we're trending, right? On a bigger picture. Take a few moments. Maybe not. Maybe we have a little bit of resistance that we need to be careful of. Okay. Plus, we're looking for a little bit of more bullish divergence here, so let's see what happens. All right, so here we go. The cycle is turning red. That's watering down the probabilities already. I'm adjusting the trend line. Because the cycle is red, we need to close above the trend line. Okay? That is not a close above the trend line. Okay? That would be right here. Okay? So now it's just already getting away here a little bit. And the reason why I didn't aggressively push the button here, because again, we have a little bit of dynamic resistance printing, and the entry would be right almost on top of it. Okay? So what I did is I held off because I would really like for it to get above this resistance before I got excited about getting long. Okay, did that make sense? So we drew the trend line correctly. We had to draw the trend line because this was turning red on us. We had to have a close above it in order to activate the long. All right. My concern was the dynamic resistance right above us. And as it's turning out right now, it would be giving us grief. And not only that, the cycle is now curling over, which is what we definitely don't want to see if we're looking for bullish opportunities. Okay. So for the moment, I want the ES to get above here before we take any long positions. Okay, that's the game plan there. All right. So I'm going to delete my trend line and go somewhere else. Let's go to the euro currency. Notice the first thing I do, zoom out. Okay, are we trending? Okay, this one's pretty much easy. It's not, right? And if you're not sure, dynamic resistance and dynamic support, okay, with some prior highs like this, right? Basically, you can draw a box around this. That's telling you we're trading sideways, okay? With this, no action, okay? We're not trading, not doing anything until we break out of the box. Okay, so the market needs to be trending, okay? If you're not sure, dynamic resistance side by side will offer you that clue, okay? If you're not sure, don't push any buttons, okay? It's side by side. That's your first clue. We're trading sideways. Let's try the Swiss franc. Not a lot of movement there, so I'm going to bypass that one. The British pound, like the euro, sideways. Why? Dynamic resistance, dynamic support. Okay, if you're not sure, easy and obvious is when they're side by side like this. Okay. Okay. Let's go back to the indices because that was rocking and rolling. Okay. Notice the observation I made just a second ago as this was falling down and breaking. This was kind of a clue that the market was going to do this. All right, so that's why we wait. All right, so stand by here. My phone's buzzing again. All right, back in the saddle here. We didn't miss anything here because the indices are trashing around here. Okay, the S&P is just sideways, so we're not missing any action. So let's go back to crude oil. See if there's anything going on here. Okay, as I said before, we were back here. Okay, and notice how we reacted off of that high. Okay, so now we're trading above that. That's why we zoom out. Now we're trending again. Okay, so now we're going to look for any opportunities to get long. Okay, what the problem is the cycle is red. We don't have any bullish divergence whatsoever. Okay, this was the normal thing for the market to do. Okay, Joe, market pull back to the BBC. This is what you're looking for. This is not good for the home team. We want this line to be blue. Okay, it's red and pointing against us, so that's disqualifier. So let's see if it makes a higher high here. What's noticed here is that the cycle is starting to turn blue here. So maybe we'll have an opportunity here in the crude. So hold on. Okay. So here we go, making higher highs. Okay, that's a good start. We got, see if we can get a little bit more here. We need the green line on the other side of the blue cycle here. Okay, so if we can get the market to run here a little bit, okay, and set back, we'll be in a position to get long. Okay, so hang in there. Okay, so notice how the green line is now starting to get under the cycle, and now dynamic resistance is printing. So that's okay. Okay, so we have the bullish divergence back here, the bullish cross. We have higher highs, and we have the divergence building. So now we're looking for a pullback to the BBC. And while that happens, now it's time to activate the trend line. Okay, dynamic resistance is going to be a problem. Okay, ideally we want it to get all the way back to the sling or the BBC here. If it qualifies, what I'll end up doing is going inside the green and left clicking. Okay, so I'm waiting for it to print another red candle so I can draw a trend line off the tops, because I'm going to blow it up for us a little bit. Okay, there's our trend line. Okay, here's the normal thing for the market to do. The cycle has turned red and now curling over. Okay, no trade. Okay, so let's talk about that. We drew the trend line. We did that because we didn't know if it would come back down to the BBC. It actually did, but the cycle turned color on us, right? But not only that, it's starting to curl over at a 45-degree angle. Okay, ideally we want this to be blue, right? This is red and pointing against us. When we get faced with this, we do not take action. And here's a perfect example where someone might, and they might have been stopped out. Okay, or if it does race out of the hole here, it's just because you got a little lucky. Okay, so again, you have to be careful. If this turns a color on you, okay, as long as it's flat, like up here, that's fine. But when it starts curling over, that's not good for the home team. Okay, we want to stay away from that. All right, let's move on to the next one. I'm going to go to the natural gas. Okay, we have the bearish cross. Joe, you see that? That's an easy one to identify. The MA1 is red and crossing the green line. Number 2, get in the habit of zooming out. Are we trending? We do have some lower lows, but it's just marginal. So right now I would say no, we really don't. This to me looks like a double bottom. Okay, and not only that, we have dynamic support printing. All right, notice the reaction off that. Okay, so right now we wouldn't do anything until natural gas breaks this low. As I zoom out, we actually might get a potential long setup if we break this level here. So guess what we're doing? We're starting to trade one big sideways channel. Okay, nothing going on there. So we're going to switch guns and let's go to the indices again. Okay, we're not trending yet. Okay, so we're a little sloppy in here, so we're going to stay away. Let's look at the gold. Okay, notice the Then the question is, I'm not sure about the trend action. Dynamic resistance, side by side. Dynamic support, side by side. You can almost draw a box around it, right? That's your clue. That's how I'm observing it. I know right here we had a nice pullback to the BBC with an up close, and we have the bullish divergence. This is the ideal setup here. Okay, but we're actually not trending. Okay, all the variables were there, but we weren't trending. Now we're breaking out, so there might be something going on here. So hold on. Okay, we got a little bit of resistance here, so I'm not sold on the fact that we're just going to blast off here. Okay, so I want you guys to hold off on the long side. Let's get north of this level here, and then we'll talk. Okay, we want to get over this hump. We had a little bit of resistance here. We broke that. Okay. In fact, let's just do it so I can show you the action in the DOM. Okay. So the low is 61 1/4. All right. So we're long on a close above the downtrend line here. Okay. Notice I had the bracket already activated, so it automatically put my stop in here. Okay. Now the reason I did this just to kind of show you the DOM action. Okay. As I said before, I did the zoom out because I was concerned about this. And as you can tell, we're getting a little bit of grief because of that. All right. This is the kind of thing that you'll fall into. Okay. So now we're starting to move up here. Okay. Now we closed above the MA1, correct? So technically our stop should be at break even at this point. You should be out. But here's what I'm going to show you to do. Watch how I drag the stop up and move it up. Try it again. Left click over it, release it. Okay. Release it. Okay, and then we're flat. All right, so hold on. I'm going to review this, okay? So I want to talk about this, but I got to pick up this line. The result was a break even, and it should be because we're not trending, right? And look it, now it's coming down. So 1 second. All right, as I said earlier, the reason why I wanted to do this was a few things. Number one, I wanted to show you how to draw a trend line. Two, be a little bit proactive where Michael starts calling out highs and lows and be proactive trying to buy it on a stop here. Okay. This was the candle that activated the long. Okay, that one right there. Okay. We needed the trend line drawn because the cycle turned color on us. Notice this was a problem to begin with because it was starting to slant down a little bit, right? Ideally, we want this cycle to be blue and pointing up. Okay, that's why this one was so good. Okay, when it starts arching over, that's a problem. Okay, but furthermore, what we warned about, again, zooming out. This was a problem right here. So again, sometimes what you guys will do is you'll see the picture under a microscope. That's not good. Okay, you need to zoom out. Okay, and you know what? There was a nice setup here. Bearish cross here, pull back to the BBC, see how this is red, see how the MA1 is red, everything is the same color, okay? Again, the problem is, in real time, I wouldn't have hit it, I wouldn't have gone short. All right, stand by again. All right, we're back. All right, so I drew the trend line there for a reason, right? Because that was the first time we've actually pulled back to the BBC. But notice again, this is blue and pointing at a 45-degree angle against us. So there's no trade there. Okay, so nothing there. All right, let's try it again. Let's go to Crazy Crude. Zooming out. Okay. If we get another green candle, I'm going to draw a trend line off the two lows. Bearish cross was back here, right, Joe? The cycle is red. That's what we want to see, and the green line is pulling away. So we have the bearish divergence. Zoom out. Are we trending? This will be a problem here with dynamic old resistance here, but we're gonna do this anyways. Okay. So if that happens, I'm gonna go inside the DOM here and left click and get short. Okay, we'll be in the DOM on the red side. Okay, so we're trying to get short. Remember, the normal thing for the market to do is to get back to this BBC. That's what we're expecting to happen. Okay, so here we go. Yes, that's okay. That's going to happen. Okay, so what you're going to learn with time, Joe, is you're going to learn what Michael's doing, where he's calling from highs and lows, right? So like this, he's saying, here, let me just draw a trend line for you. So what he's saying is the high is 51.57. Well, the low should be 51.53, right? So you would right click at 51.52. So if the market breaks down here, you're going to be swept into the trade. Okay? So I'm going to cancel it. Okay? So an observation here, the cycle turned blue, so the trend line's required. Good thing is we already have it drawn. Okay? So again, follow along, Joe. If the high is 58, then the low should be, well, now it's moving up again. So if the high is 59, the low should be 55. We would now right click at 54. Okay? So you take whatever that high or low is and add or subtract 5, and that's the number you press on. Okay? That's what he's doing in the room. See? The height of each candle is 4 ticks. Why? Because we're on a 4-tick range. That doesn't change. But in order to print a new candle, it's going to have to print 5 ticks. David, I'm on the other line. Let me call you back. All right, so let's see. So again, the high was 59. The low should be 55, right? So that's why I have the order in at 54. Okay. That trend line is required because the cycle turned blue. Can I place a buy stop order? Or yes. Yes. Absolutely. That's what I have here right now. I have a sell stop working. I only have a sell stop working. Yes, you can. You can also have a sell stop limit, so you're not accepting any slippage. Okay. See here, this little button on DT Pro. Okay. You can put, is it this one? Hold on. I don't want to screw that up here. You can put a sell stop limit in, yes. Okay. And if this gets filled, the stop is automatically going to be placed right behind it. Okay. So the high is 60, right? Our new order should be 55. Okay. All right, I have to pick up this line again, so hang with me. Okay, that's the order, get short. All right. So there, that's the trend line being broken, right? Okay. And look, I got slippage on it because I didn't have the sell stop with limit. Okay. So anyways, this is where we're short from. The buy stop is here. Okay. So if the market goes 4 ticks in our favor, and I'm going to move the stop down to break even, or if it closes on the other side of this MA1 right here. Okay. And what we expect to happen is the green line to turn into the cycle. Okay. Yeah, I'll try to do that in the next one. Okay. Let's see what happens. Remember, when this turns blue on us, it waters the probabilities down. The good thing is it's flat. Okay. So, this is something Michael would do in the training room for sure. Okay. Let's see if she breaks down here. Okay. All right. Now the stop, I drag and release. And now it's at our entry. Okay. Now we're going to have to compete with this low. So let's see what happens. Okay. We got no risk on the table. Okay. Because now the stop is at our entry. Okay. I'm going to move it right here. Okay, so I'm moving it 2 ticks in front of our price. Okay. And I'm doing that because we're here at this old low. So if it doesn't about face here, at least we take something out of it instead of nothing. Okay. Sorry for the phone calls, guys. The markets are moving. I got those guys that are short and long, and there's issues going on, so I have to pick up those lines. So I'm trying to dodge and weave in between here. Okay. So see what happens here. Expecting the green line to get into the cycle. And what's supposed to happen is the market's supposed to make a new pivot low. Might be struggling here because we had an old low over here. So let's see. Again, the stop is right here. All I do is left click over it and release. Okay, that's how you drag the stop down. This was okay because it was flat. Okay, if this was curled up at a 45-degree angle, I would have said that's a no-go. It's flat, that's fine. Okay. So it's starting to get closer into the cycle. I could see that. Overnight, with the market action in some of these markets, I could see that for sure. That would not surprise me. That is a possibility. That's why I was talking about this disclaimer here, because you can have the stop in and do all the right things, but if we have a crazy opening like we did, yeah, your stops could get jumped, and then you're at risk. You have risk still on the table. Call back, Paul. Call back. Okay, so that's why, that's important. That's why you need to be in front of the screens, okay? If your stop gets jumped, you're going to have to take action. All right, so here, look, I'm just going to exit that market and cancel and just be done with it, okay? The expectation is for the market to drop, continue to drop until the green line gets into the cycle, okay? Do you guys understand why I drew the trend line? I had to draw it because we're in the habit of drawing trend lines because we never know if it'll get to the green line. Okay, the BBC. Okay, not only that, the cycle turned blue on us, that the trend line was required with a close below it. this candle here with the match to the downside. Okay. Now let me see if I can't stop limit right here. Factor 0. Okay. All right. So the next time, let's see what happens. All right. So now we're going to go fishing again. I'm going to go to natural gas. Okay. Notice how I zoom out. We're trending. We're going up. Okay. This is a problem here. This waters the probability down. Why? Because it's red. This is how the trend line should be drawn. We would need a close above the trend line in order for us to get long. The fact that this is curling down a little bit, we are going to take that off the table because that'll be more or less a momentum trade, and I'm not talking momentum trades right now. Okay, here we go. Indices making new highs, so we're trending. Notice how we were congesting here. So here we go. Going to look for the market to pull back toward Joe, the green line, the BBC. Activate the trend line. It's above the top. That is close to the trend line. Let's look for a better opportunity. Let's look for a better close off the trend line there. Okay? That is too close. This is watering down the probability. Why? Because it's red and now curling over. So the trade is off the table. Okay? Notice how it's curling over. Okay, Joe at a 45-degree angle against us. We're swimming against the tide. Okay? So that's no trade. Okay, I'm going to try a different market. I'm going to go to the gold, see if anything's firing there. Okay. Zoom out. Are we trending? Do we have lower lows? Yes, we do. This is how I'm going to draw my trend line. Off the wick, bottom of the shoulder, it should look like this. Okay? The cycle is red, and the green line's above it. So we do have that bearish divergence. So we're looking for a short in the gold. Okay? This is a little bothersome here because it's a little flat at the midpoint here. Is gold trending? Good question. Zoom out. Go ahead, if you have charts, zoom out. Yes, we have lower lows. Okay, so I'm saying yes, it is. Okay, now I'm going to pick up this line because he's calling from Switzerland and I only get a few chances. 1 sec. All right, so I'm back again. All right, so we're pulled back to the BBC. We're doing all the normal stuff. We have the bearish divergence. I want to make one point on this one. This is good. The cycle is red, okay? For the new guys, okay? Ideally, we want a decent slope. The fact that we're laying here at the midpoint might be an issue, okay? Let me repeat that. Red is good if we're looking for a bearish opportunity, right? The green line is above it. So we have the divergence or the separation, right? That's what we want to see, okay? When we get to the midpoint here and it starts flattening out a little bit, what the market might start doing is start chopping around, okay? So consider that. I know you guys are thinking about a ton of stuff here, all right? But you'll have to consider that. Ideally, same color with a good slope to it, okay? Same color with a good slope to it, okay? That's ideal. All right, so we'll see if this qualifies, okay? I'll come back to this one because it looks like we're just watching paint dry here. And that might be a result of the flat cycle. All right, so here's a pullback to the BBC. Notice the wrong color, okay? Right now, to the upside a little bit, Nathaniel. What's the bigger picture in the gold for the moment? Up. Dailies, however, we have resistance here. Notice whether it was a 4-tick range chart or a daily chart, we have resistance here. So if we fell back in the range from here, I would not be shocked. Okay, you actually could take a short opportunity right here, risking the high, because you have a double top. Okay. All right, so let's try to find something that's moving. That's a crude oil. Let's try a currency. Nothing there. I want to look at least one more. British pound is sideways. The S&P one more time here. Okay, this is what I meant by all the same color. Okay. See how that slope is blue? Green line's underneath it. That's good. Now we have to make a new pivot high before we can get excited about getting long in the S&P. We have a double top in place, so don't get confused by that. Okay? Get above dynamic resistance and let's talk about buying. All right, so I'm going to see if this qualifies. It's going to be watching paint dry. All right, are there any other questions? Any questions? I know it was in and out, picking up other lines and stuff. Kind of scattered this hour along here, but the takeaway from this is, number one, are we trending? Okay, get in the habit of zooming out. That means hit the red magnifying glass if you have DT Pro. Okay, I'm not asking you to go to a 30-minute or a 5-minute. All you have to do is zoom out. Okay, it has to be easy and obvious. If it's not, then don't take the trade. Okay, after the cross, okay, after the bullish cross or the bearish cross, okay. Okay, so Joe's question is, must be trending in one direction, or can we also do a counter trend? You can, okay? You can do a counter trend. Those are available. Those are these setups that Michael talks about on Tuesdays. All right, these are the other trades that have kind of evolved over the years. I always go to this one because it's been around from day one. Okay, so you can, but my fear is that you're going to start over trading, and then you're going to get them all mixed up. Okay, so Joe, you got to really think about that. Okay, because you can be in and out, in and out, in and out all day if you keep looking for it. Okay, so I think you focus on one, master that, and then maybe go on to some of these other ones. Or if the slingshot setup doesn't excite you, then maybe you gravitate toward one of the other ones and master that one. Okay. But I think if you start going in and out and in, and all that other stuff, you're just going to get confused. You'll get overwhelmed. All right. So again, we had the bearish cross. I'm zooming out. Why? To see if we're trending. We're not. We're sideways. Notice how we're back and forth here. Okay. All right. So again, the traps that people fall into, they get into markets that are sideways. They don't see it because they have the marker under a microscope. Get in the habit of hitting the zoom out button. Get in the habit of drawing a trend line. You have to keep an eye on the cycle. We want everything to be the same color. If it's not the same color and pointing against you, then there's no trade. Okay. So that's it. I recorded this right now till the S&P breaks out of the box. You're doing nothing here in the S. Okay. It's sideways right now. So I recorded it. I'll put it on YouTube this afternoon. And then if you have questions along the way, just email me or just call me. Okay. That's it. All right. So we'll see you next Thursday, and then hopefully, we'll get interrupted 1,000 times, and we'll point out some more stuff.